First step, we're going to add the technical indicator. We're going to type it in, select this one, and there you go. It's on the chart. I use this indicator on the 1 minute time frame for gold, but you can use it on any financial market. Next, we're going to set it up the right way. It's set to 100, but we're going to change it to 50. Next, you can adjust the colors to make it more visible on the chart. Do the same thing here and confirm. You can see that this indicator will give you very precise buy and sell signals. First, remember that it's very effective when the market is trending. You can see here a downtrend. You get an excellent trade signaled right at the top for a sell. Same here, trend reversal, a great buy signal given here with a nice profit potential. On the other hand, when the market is flat, when it's not trending, the indicator is less effective. It'll give small buy signals, small sell signals, but those are the signals that are the most misleading. So avoid trading when the market is flat. Now, I'm going to give you some live examples so you can use this indicator in the best way possible. Let's let the Japanese candlesticks play out a bit. And you can see that the market just gave a buy signal following this nice bullish move. We're going to wait for the zone to turn from red to green here, and we'll also wait for the line to switch from red to green. So we'll wait for this candle to close, and we'll simply buy right there. We set the stop loss just below the previous wick, and we're aiming for a risk-reward ratio of 1.5. Here's the first trade. You can see that a few minutes later, the trade is confirmed by the market. We wait and look for a second signal from the technical indicator. As long as the indicator doesn't give a signal, we don't do anything. A trader's job is to be patient. That's 90% of the job, and we just got a sell signal right now. You can see the line changes from green to red, and the green area turns red. So we're gonna sell at the close of this first bearish candle in the red zone. Entry price is here. We set the stop loss just above these small wicks here. And like before, risk reward is 1.5 times. The second trade is placed, and we'll see if the indicator was right. Once again, it's a nice trade. The indicator hit its target. You've just made money for the second time in a row in just a few minutes. As you can see, it's a very simple logic to understand and follow. We're going to let the Japanese candlesticks play out and wait for the next trade. Just a reminder, we're on the 1 minute time frame and this is scalping on gold. The indicator just gave a buy signal. You've got the logic down now. We go from a red line to a green line and from a red zone to a green zone. So we'll buy when the first candle in the zone closes. Entry price, we set the stop loss below the previous wick and look for a risk-reward ratio of 1.5 or 1.6. And you can see that very quickly. In 3 minutes, the market hits the target, and that's a third winning trade for this indicator. Let's let the market run and wait for the next trade. We stay patient, as always. That's a skill you need to develop. You see the market giving you a fourth trade here, this time a short trade. You can see that we had an upward move, formed a double top, and now the market is confirming this signal to the downside. Just like before, we'll only enter a short position when we get the first Japanese candlestick in the red zone. The close of the first Japanese candlestick in the red zone is right here. We set the stop loss just above the last high and aim for a risk-reward ratio of 1.5 or 1.6. The trade is placed. Let's see if the market hits our target for the fourth time in a row. And yes, the market just reached its target for the fourth consecutive time. You can see how, when there's movement in the financial markets, this technical indicator is incredibly effective. I'll let you practice with this technical indicator on a demo account. Thank you for your attention. See you next time.